Welcome to UPSC Vinoth. So today we are going to continue with the topic of cryptocurrencies and stablecoin. So what is stablecoin? So stablecoin is something. So the cryptocurrency is pegged with a asset. The cryptocurrency is pegged with a fiat currency or else a tangible asset or else a cryptocurrency is pegged with another cryptocurrency also. So first of all, why this is in the news? Hong Kong is preparing a regulatory regime of stable coin issuers. See, they are going to create a regulatory regime for stablecoin issuers. So definition: a type of cryptocurrency whose value is pegged to another asset or another asset to maintain a stable price. That is called stablecoin. See, pegged with another asset. Commonly, we can say that pegged with another asset to maintain stable price. Because cryptocurrency, the one of the most um, important critic of cryptocurrency is volatility. So to counter the volatility, you are pegging the cryptocurrency with a stable price. So an alternative to high volatile traditional cryptocurrency like Bitcoin, Ethereum acts as a stable medium of exchange. Okay. Now, what are all the types of stable coins? The classifications collateralized by fiat currency. So when the stable coin is when the cryptocurrency is pegged with fiat currency, it is it is when the stable coin is pegged with the fiat currency, that is a kind of stable coin. So when the cryptocurrency is pegged with the stable currencies, fiat currencies like US dollars, euro, it is also termed as stable coin. When also something it is pegged with the commodities with tangible asset like gold, silver. So gold, silver. See Pax gold. See, this is one of the important cryptocurrency. Pax gold is one of the important cryptocurrency. It is pegged to when the cryptocurrency is pegged to gold price. So when with respect to fiat currency, the cryptocurrency is pegged with US dollars. US dollars. So with respect to other cryptos, when the cryptocurrency itself pegged with an other crypto, so that is DIA. So non-collateralized. So some cryptocurrency are still non-collateralized. It is does not pegged with any other resources. So hybrid. Sometimes it is collateralized, sometimes it is not collateralized. So now we shall discuss some of the model MCQs with respect to the above stable coin concept. Fiat currencies with the reference of classification and mechanism of stable coin, consider the following statement. Fiat collateralized stable coin are backed by traditional currencies like US dollars, euro, which are maintained in the reserve. So fiat collateralized. See here, fiat collateralized. Yes, this is correct. So statement 2. Commodity collateralization stablecoin is such as Pax Gold. See, the name suggests commodity, the name suggests fiat. So the commodity is something gold, Pax Gold. So see, Pax Gold recently seen in the news with respect to that is cryptocurrency. No, stable coin. Stable coin. It is not a cryptocurrency, it is a stable coin. Non-collateralized stable currency rely on complex algorithm and smart contracts rather than physical or digital reserve to maintain their peg. Non-collateralized stablecoin. Here, see, non-collateralized stablecoin is a complex algorithm and smart contract. Yes, statement 3 is correct. Hybrid stablecoin are restricted to using only single category of collateral to ensure regulatory compliances and resistance. So, see, hybrid is combined backing method to fiat and algorithm for resilience. So, see, it is statement 1 is correct. Statement 1 is correct. Statement 2 is commodity collateralized stablecoin is backed by tangible assets such as gold, silver, not intangible assets. So here they had used the word, here the intangible asset, this tangible asset. Tangible asset. So tangible asset that is pegged with the gold. So statement 2 is wrong. Statement 3 is correct. Algorithm stablecoin. That is smart contracts. By smart contract, this is non-collateralized. Hybrid stablecoin. Statement 4 is a combined element of multiple categories. Fiat algorithm. It is a combined element to enhance resilience. Okay. So Hong Kong is currently finalizing the regulatory regime for stablecoin issuers. Okay. So with reference of digital following digital asset is an example for stablecoin collateralized by other cryptocurrencies. Which of the following is digital asset? Say they are asking stablecoin. DAA. See, they are saying that following digital asset example stablecoin collateralized by other cryptocurrency. Cryptocurrency is DAA. Gold tangible asset is PAX. So this is what? This is collateralized with the currencies, collateralized with the currency. So it is collateralized with also coin, USD coin, it is USD dollars. Okay, see Tether is collateralized with fiat currency, fiat currency. So PAX gold, commodity collateralization. DIA is cryptocurrency. Okay, see, and with reference of classification mechanism of stable coin, consider the following statement. Fiat, okay, this is same thing. Okay, fine. Same thing has been repeated. Okay, now coming to the India's cryptocurrency regulation partial oversight model. See, India is taking steps to inculcate the cryptocurrency in our economic system. But right now, we are framing a regulatory system. First, approach to regulation. So, partial oversight model. What is the model which is India is following regarding cryptocurrencies? Partial oversight model. See, still we don't have any comprehensive crypto bill. See, we don't have any comprehensive crypto bill, but we are trying to make it partial oversight to disclosure speculation. No outright ban. We didn't ban. We didn't ban. See, earlier RBI banned cryptocurrency, but now no outright ban is there. So now taxation framework defined as virtual digital asset. So see the term virtual digital asset. See, according to RBI's connotation, cryptocurrencies are defined as virtual digital asset. 30 percentage flat tax on all gains. So all gains, 30% flat tax, 1% tax deduction at the source. Tax deduction at the source. Legal status. Holding crypto is not illegal, not recognized as a valid currency for payment. See, it is not seen earlier holding cryptocurrency when the initial times was termed as illegal, but right now it is not illegal, but it is not recognized as a valid currency for payment. That means if you are defaulted by any payment, defaulted by any buyer, so you can't complain at RBI. Indian rupee is the only legal tender. Still, we have only one legal tender, that is Indian rupee. Anti-money laundering and reporting. Purview Prevention of Money Laundering Act 2022. Exchanges are reporting entities must be registered in Financial Intelligence Unit. See, all reporting entities must be registered in Financial Intelligence Unit. Strict know your customer and transaction reporting norms are mandatory. KYC norms are mandatory. RBI stands on central bank digital currency. So the RBI is highly cautioning and critical warning against the risk of financial stability and monetary policy. Actively promotes CBDC, the Indian digital rupee. Actively promotes CBDC and Indian digital rupee. So with reference to regulatory and taxation framework, cryptocurrency in India. So now we can discuss the question. With respect to taxation framework of cryptocurrency, India is implemented a comprehensive crypto bill. See, we didn't implement, we are trying to implement a comprehensive crypto bill. So statement one is wrong. Under the current tax regime, gains, virtual digital assets are subjected to 30% flat tax with no provision to offset losses. See here, with no provision to offset losses. So set of losses. So statement 2 is correct. Crypto exchange in India are classified as reporting entities under PLMA Act. See, yes, it is considered as reporting entities. So statement 3 is correct. Now statement 4. The Reserve Bank of India has replaced all private cryptocurrency with digital. No. So it is wrong. So now we shall go with again regarding role of Reserve Bank of India and Financial Intelligence Unit in cryptocurrency. Financial Intelligence Unit in India is responsible for mandatory registration of crypto exchange. See, though it terms as mandatory registration, yes, it is correct. Financial Intelligence Unit are responsible for mandatory. Now they will replace the word. How they will frame the question? They will replace that Financial Intelligence Unit with RBI. When the RBI is replaced, it is wrong. Financial Intelligence Unit is responsible for mandatory registration of crypto exchange. Yes, it is responsible for mandatory registration of crypto exchange, compliance with the anti-money laundering laws. RBI views the borderless nature of private cryptocurrency as a tool to strengthen the national stability. See, it does not says that it is risk for financial stability. Yes, RBI repeatedly warned the volatility and borderless nature of cryptocurrencies poses risk to financial stability. Yes. So statement 2 is wrong. So now the digital rupee represented the sovereign liability and the state's official responsible for private digital assets. So statement 3 is correct. The digital rupee is state backed CBDC. CBDC, the digital rupee, e-rupee, e-rupee, e-rupee that serves as a safe digital alternative to volatile private token. So unlike private cryptos, e-rupee carries full trust. So yes, e-rupee, see, private cryptos does not have trust, but e-rupee has full trust and sovereignty. Now, global regulation on cryptocurrency. See, this makes the discussion most comprehensive. So in United States, the genuine Genius Act Genius Act 2024 has been passed by federal rules for stable coin pegged to USD. Stable coins are now pegged to USD. So Genius Act. So it is federal oversight, stable coin clarity, pegged to dollar, US reserve. Then you see which of the countries have the formal regulation with respect to cryptocurrencies. US. Yes, USA. Number one, USA. Number two, China. Number three, India. Number four, European Union. See, USA has. European Union has single comprehensive law called MICA that provides legal clarity and licensing across 27 member states. Unified regulation, market clarity, cross-border licensing. Yes, EU also has the MICA, crypto market in crypto asset. Now China enforces complete ban on all crypto transaction and mining while promoting its own. See, they enforce complete ban on cryptocurrency, but they are promoting its own CBDC, central bank digital currency, the digital yuan. This makes the this makes the discussion most comprehensive. See, the United States and European Union made the legal provision and in that United States pegged with stable coin, pegged with USD and make the cryptocurrency a stable coin. Here, single comprehensive law has been made, but China completely banned the cryptocurrencies and they promote their own cryptocurrency. Central bank digital currency is the digital yuan. Now, with reference of global regulatory landscape cryptocurrencies, the reference of global regulatory landscape and cryptocurrencies, the European Union has implemented MICA, yes, market in crypto asset, which provides unified licensing framework across all of its members. Yes, statement one is correct. The United States has enacted Genius Act 2024 to establish federal oversight, specifically stable coin pegged to US dollars. Yes, China follows partial oversight. They completely banned. No, statement three is wrong. The digital yuan is decentralized cryptocurrency issued by people of Bank of China to replace private digital tokens. See statement 4. Statement 4 is incorrect. The digital yuan is issued by central bank. It is central bank digital currency. It is not decentralized. Here you may think that yes, this is correct, but here they kept the key with decentralized. It is not decentralized. Digital yuan is not decentralized. It is centralized digital currency. Okay. Okay. So, which of the following countries regions has adopted single comprehensive law for licensing crypto assets? See, you know that European Union. Already we saw that. So this with reference to CBDC. See here. So issuing authority, stablecoin CBDC, private entities, central bank. Nature of money, private money, central bank. CBDC is everything is central bank. Pegged value, pegged to fiat, commodity, crypto, but here it is represented the sovereignty. It is not pegged. It is not pegged. It is an sovereignty. Stable mechanism. Maintains via collateral, but backed by state authority. Legal status, not legal tender, but it is a legal tender. CBDC is a legal tender. Now we shall have some broader discussion with respect to CBDC. CBDC with reference to CBDC, central bank digital currency. See, central bank digital currency is a common term in India. Central bank digital currency officially named as e-rupee. See, officially named as e-rupee represented the direct claim on central bank similar to physical cash. Yes. Wholesale CBDC is designed for everyday transaction by general public and business replaces the physical currency. See, statement 2 is incorrect. It does not replace the physical currency. Wholesale CBDC is intended for restricted use by financial institution. Wholesale CBDC is intended for restricted use by financial institution. See here, they are saying it is for general public. No, it is restricted for general public. It is restricted. So statement 2 is wrong. Retail CBDC is restricted for the use of financial inclusion institution. Retail, see, now it is wholesale, it is retail. So retail CBDC, digital version of cash, intended for public use. Intended for public use. So statement 3 is incorrect. So statement 4. Here statement 4 comes. The e-rupee can be held in digital wallet offered by both banks and non-bank entities. Person to person, merchant to merchant transition. See, statement 4 is correct. E-rupee is transition through digital wallet that can be provided by both bank and non-bank services. Person to person services, person to merchant services also. So this is correct. Which of the following is best to describe the central bank digital currency? Though we had a question. So it is a decentralized crypto asset. See, it is a decentralized crypto asset. Best describes the nature. No, it is not a decentralized. It is centralized. So a digital a digital form of legal tender. CS CBDC is a legal tender representing the liability of the central bank. Yes. A private digital currency. No, it is not a private digital currency. A commercial bank deposits that can be used for a interbank lending only. No, it is not a deposit. Okay. Now we shall have a central bank digital currency. Central bank digital currency. Core definition. It is a legal tender. See, it is a legal tender issued by the country in digital form. See, central bank digital currency is legal tender. Legal tender. Okay, let us. So there is a two more discussions. So please be patient. So surely we'll get a question from this video. So see, yes, core definition. What is a core definition? Core definition is, it is a central bank digital currency is a legal tender issued by the country's central bank in digital form. Digital equivalent of the country's fiat currency. Yes, one CBDC is equal to 1 rupee, like that. So represented liability of central bank. Yes, liability belongs to central bank. Direct claims on central bank, just like physical cash, controlled and monitored by Central Monetary Authority, like RBI in India. RBI will monitor e-rupee. Central bank digital currency, that is e-rupee, digital e-rupee, digital rupee usage and transaction, held and transaction through e-wallets offered by bank and non-banks. It is e-wallet. So e-rupee wallet. So person to merchant is also seen. Person to merchant. So types of CBDC: retail CBDC and wholesale CBDC. For public use, for restricted use for financial institution. Access digital version. So it improves the interbank payment settlement system. Okay. So now, with reference of nature of central bank digital currency, India and China, consider the following statement. The Indian digital rupee, centralized digital currency. Indian digital rupee is a centralized digital currency to be interest bearing on encouraging public adoption. See, statement 1 is here, though it is centralized, but here the digital rupee is designed interest free. Interest free, it is equal to 1 rupee is equal to, it is there in interest bearing. See the keyword, it is not interest bearing, it is a common rupee. It is not a interest bearing, it is interest free. That means 1 e rupee is equal to 1 rupee only. 1 rupee only. 1 e rupee is equal to 1 rupee only. So it is not interest bearing, it is not a interest bearing. So statement 1 is wrong. Unlike private cryptocurrency, e-rupee is sovereign backed and carries zero credit risk for the holders. See, statement 2 is correct. It is sovereign backed by instrument and directly liable to central bank. The status ensures zero credit risk. Yes, it is zero credit risk. So statement 3. Statement 2 is correct. China's digital E Yuvan framework has recently proposed generation of an interest income for holders to promote its usage. See, initially to promote E Yuan, China is proposing a generating interest income. See, only this interest income is only seen in China, not in India. The move by People Bank of China. This is done by People Bank of China, but in India we don't give any interest. We don't generate any interest. So next, fourth statement. So statement 3 is correct. The Indian CBDC is restricted only to online transaction mode to ensure real-time monitoring by the Reserve Bank of India. So ultimately it is wrong. So it is both online and offline mode. So you may think, yes, CBDC is restricted only to online. No, it is not restricted. It is both online and offline mode. It can be used both online and offline mode. Only two is correct. With the characteristics, which of the following is characteristics of distinguished with the digital rupee from traditional cryptocurrency? Digital rupee from, see, digital rupee versus cryptocurrency. Centralized regulations by the National Monetary Authority. See, yes. So digital rupee is centralized authority and regulated by RBI. So statement one is correct. Issuer as a legal tender and representing sovereign liability. Yes, statement two is also correct. Statement two is also correct. It is a legal tender. It is a legal tender. Statement 3, absence of interest income. So we don't get any interest. See, this statement is very much important statement with respect to cryptocurrency e-rupee, because China's digital e-yuan, China's digital e-yuan has a digital e-yuan. China's digital e-yuan is bearing interest, but India's e-rupee does not bear interest. So absence of interest income. So it is statement four. That means absence of interest income similar to physical paper currency. No. So in physical paper currency we get interest. See, in physical paper currency we get interest. It is interest free. So interest free. So statement 4, use of strong cryptography for securing digital transaction. So statement 4 is incorrect. So this common feature rather than distinguished one. Both CBDC and cryptocurrency utilized cryptography and distributed ledger securing technology to protect transition. So here they are saying that use of strong cryptography for secure digital transaction. Here statement 4 is incorrect. The common feature, this is a common feature rather than distinguished one. It is a common feature. It is not a distinguished feature. So, so it is a common feature, not distinguished feature. Okay, all the statements we have discussed. Finally, we are coming to the last important topic with respect to cryptocurrency, China's digital e-yuan. So, China's digital e-yuan is a central bank digital currency of People Bank of China. E-yuan, ECNY is a digital bank, central bank digital currency of People Bank of China. Holding E1 will start generating interest income. So this is a, with respect to India CBDC, it is one of the most important feature. But India CBDC does not hold any interest, but China's E1 holds interest, because to step to promote CBDC, implementing slated for next year under new framework. Purpose and context: China is stepping up efforts to promote the use of CBDC, aim to enhance the attractiveness and acceptance. So you know that. So it is one of the most exhaustive discussion. So with the reference of China's central bank digital currency, consider the following statement. China's e-yuan digital currency is issued and regulated by the People Bank of China. Yes, statement 1 is correct. So under the newly proposed framework, e-yuan holding holdings will transaction from being interest free to generate interest income. Yes, it is statement 2 is correct. Now, it generates interest income. Now, unlike traditional fiat currency, E1 does not represent the sovereign. No, it represents the sovereign liability. The primary objectives of introducing E-yuan is to discourage the use of high value commercial transaction. No, statement 4 is also wrong. So now coming to the question. Which of the following authorities is responsible for issuing the regulation of E-yuan? People Bank of China. People Bank of China. You know that. So this makes this here comes to the end of cryptocurrency. I'm damn sure I'm expecting at least one question from these two videos of monetary policy with cryptocurrency. Thank you.